Exactly a week after number portability was launched, allowing subscribers the freedom to migrate within networks without changing their numbers, fears of sabotage are arising, with the number of subscribers who have ported encountering difficulties in receiving calls or messages from their former operators. Apparently, subscribers who have migrated can only receive calls from within the networks of their new operator. It is alleged that subscribers calling them from their previous operators receive a message that the number is unavailable, hence beating the purpose of porting. Airtel has already lodged a complaint with both the Communications Commission of Kenya as well as Porting Access, the company overseeing the porting service. CFC Stanbic Bank has today upped the stakes in the mortgage financing market with a trend-setting product that offers prospective homeowners up to 100% mortgage financing. The bank is hoping to tap into growing demand for home ownership, which is being driven by a burgeoning middle class. The new product is tailored to attract first-time homeowners who are usually locked out of the market by the requirement of a 10 to 20% initial deposit. The product is expected to facilitate home buyers access loans of between 3 to 10 million shillings with a 4-day approval period. National carrier Kenya Airways has announced plans to raise additional capital for its intended growth and expansion plans. Kenya Airways has already appointed its financial, legal and public relations advisors in what analysts say is indicative that the airline could be in the market to raise the money sooner rather than later. Kenya Airways is already holding consultations with stakeholders, including market regulators, as it seeks to accelerate the process to fund the acquisition of 9 Boeing 787 aircraft. Over the last few years, Kenya Airways has been carrying out an aggressive expansion strategy with increased frequencies in Africa and other global destinations. And in other corporate news, the government is carrying out reforms to deepen the bond market. The Capital Markets Authority says the reforms are aimed at encouraging more private sector players to participate in the bond market, which has largely been dominated by government securities, which command a 91% share of the market. Among the reforms recommended by the Bond Market Steering Committee include adoption of a hybrid market and the issuance of regional corporate bonds within the East African community, which will give Kenyan companies access to a larger pool of capital from the region. Wanjiru Gaidho, Citizen Business.